So Tesla is also out. It's been a big day in the after hours for earnings. Tesla shares, I should point out, they are lower in the after hours right now. They're just down about 4.8%. So listen, it was an outperformer last year, up 743%. It was already an outperformer this year, up 26% heading into these earnings. Growth stock, auto stock, tech stock, battery stock, it's many things. So let's get into it with Bloomberg News reporter Ed Ludlow. He's with us from our Bloomberg 960 studio in San Francisco, along with Ross Gerber, President and CEO of Gerber, Kawasaki Wealth and Investment Management. He's on the phone from Santa Monica. He owns Tesla shares, owns Tesla cars. Guys, let's get into it. Ed, I'm going to start with you. What jumps out? Because I just want to say, I just saw a headline that Tesla expects to achieve 50% average annual growth in vehicle deliveries. That was in their letter.
Yeah, that was in their letter. The thing that wasn't was basically a stated delivery goal for 2021, right? Consensus going into this was around 800,000 units. And perhaps, the market a little bit disappointed that Tesla didn't just state outright what they think they will deliver this year. I guess you could ask Ross about that.
Well, let's ask Russ. Russ, what do you think about that?
I think Elon's learned his lessons about, telling people what his goals are, and then everybody jumps on him if he's short. So he's doing what Apple and all the other companies are doing and leaving a little more wiggle room for error. And maybe I think the market's reacting a little bit more towards missing on the EPS side than per se what we expect out of deliveries.
All right, Ed, go ahead and pick up what else stands out for you.
Yeah, and beyond that, credit where credit is due. Tesla says they're on track in Berlin with the Gigafactory and also in Austin to start deliveries from those locations this year, which is pretty astonishing, right? Based on, how quickly they built the Shanghai plant, they've now brought Shanghai up to installed annual capacity of 450,000 vehicles, which is impressive. And they're basically touting in the earnings release that they expect Germany at least and perhaps Austin to go the same way. There is some pressure on operating margins that Tesla says is largely from aggressive price cuts in China. The average selling price for Tesla vehicles came down, which is interesting, right? Because Elon Musk and co have talked for a while about wanting to make their vehicles more affordable, but that is completely at odds with where the rest of the industry is going. We're seeing higher average selling prices, particularly in combustion engine cars. And the final thing is that executive compensation was very high, which ate into margins as well.
Yeah. Hey, listen, well, okay. So I wonder, Ross Gerber, if there's a bit of a pullback, are you going to be buying into this?
Well, no, because we think where we'd like to buy Tesla is much lower than it's going to go tomorrow.
How much lower?
Well, we see Tesla as a buy at around $500 a share.
Okay.
And that's figuring looking at 100 times this year's estimate for us in 2021 of $5. So to me, paying $500 is what I would pay. But I also paid $7 for all my shares. So I don't need to sell. I don't need to do anything. So I'm a holder of Tesla stock as it bounces around here. And if I get a real correction in Tesla, I'm certainly going to add to it.
All right. And what do you like about this quarter? What don't you like about this quarter, Ross?
Well, I like the top line. The top line numbers are great, but I think you guys kind of hit on the topic. Margins were definitely hit. Whether it's from price reductions or increasing expenses, they were definitely hit from what they should have been on an operating level, and that's, I think, is why you're seeing the stock go down. But I also look at those things as not material in the story of Tesla, which is really about a company that's growing incredibly fast, completely innovating in several industries, and has just the most incredible long-term future of any company I own. So I don't look at this as anything meaningful.
Yeah.
Well, Ross, let's jump into the story that you're describing. If you look at the kind of action that we saw over the last 12 months in the share price, every time a street analyst raised their price target, a lot of that was based on future revenues, higher margin software revenue, robo-taxi. Are you disappointed we didn't hear more about that from Tesla in terms of progress on autopilot? What are you listening for on the call on those kind of value add and other business areas outside of the business of just building EVs?
Yeah, it's funny. It's a great way to look at it. So from a fundamental perspective, a lot of those things like robotaxi, I don't even factor into my analysis because I look at that as those will happen when they happen. Okay, what matters to me is how many cars they're going to sell and batteries and solar they're going to sell in the next 2 years, and what is the ramp of these products moving forward. So, for example, you brought up the rapid growing of the factories and how quickly they're getting this production up. The one thing I'm laser focused on is on Cybertruck and semi, production and delivery, because that's going to be the next big leg up for Tesla, is taking over the trucking business in America. And so, that's what I care about, because I think it's going to be hard to build the Cybertruck, and we've seen it with every time they build a new vehicle. It's kind of a nightmare. So what I'm really focused on is, are they going to execute successfully with Cyber and Semi in the next 12 months, or is this thing going to get delayed and we're going to run into problems and run into issues that could hurt the stock? So that's what we're really focused on, is the next market for Tesla is trucks. Mm-hmm. We want them to dominate this market, and that's the most important step besides getting full self-driving done, which they're working with simultaneously. But with the new battery cell structures and what they're building on the long term looks amazing. But as far as what's going to drive the stock, it's getting the truck business going.
Ross, do we need to look at this as more of a battery company in addition to being an auto or tech company?
Absolutely. In fact, that's where I think they now have the biggest moat, because every other company trying to build EVs is trying to get batteries from the same three players, and we've now made significant investment in other battery companies and other battery technologies, because basically there isn't enough of this stuff. There isn't enough cells. There isn't enough way to fill the demand that all the automakers want. So when Fisker says they're going to build a car, or GM, where are they going to get all the batteries? That's going to be the big question. So with Tesla doing this all in-house, but inventing a new cell that's 6 or 7 times better, this is going to differentiate them from the competitors for the next decade.
Ross, in one word, does Tesla and Elon Musk need to start acknowledging competition more from the likes of Rivian, Lucid, etc.?
They're not competition. No, they're not competition. What's the competition? They don't even have a truck. So when they get a truck and they can actually make the truck, and I can get in this truck and drive it. And so the competition I see is in China, and that's why they lowered prices in China. There are some good cars in China being made, whether it be by NIO or BYD or whatever. And then we're also seeing this new car from Lucid kind of getting towards production, which is a really nice car too, hence the refresh of the Model S. So, that refresh was a big thing, so I'm really stoked about it.
You guys are the best. Ed Ludlow, auto reporter at Bloomberg News. Ross Gerber over at Gerber Kawasaki Wealth and Investment Management. Guys, thank you so much. Great breakout of Tesla.